I'm going to the city and I'm gonna do a silly show. And I know all my fans wanna learn how to make some dough. I've been cruising up and down for trades each and every night. And with my iPhone reclining, I know we're gonna get it just right. I'll get inside your mind, we'll have a real good time. We're gonna trade today, we gotta trade today. Go askSlim.
Hi, I'm Steve Miller. Call me Slim. And this is the askSlim Market Week. It's a look back at what happened in the financial markets in the past week. And a look forward to what might happen in the next week. And hopefully lots of great ideas and opportunities for you throughout the show. Well, the stock market had its worst week since March, as early selling in the week became a panic on Wednesday and Thursday as stocks just moved swiftly to the downside. Friday brought a rebound, but really it was bargain hunters that came in, and banks helped a little bit as earnings came in okay at the start of this earnings season. But volatility increased sharply this week, and that was very notable as the VIX moved up to a level of 29 before pulling back a little bit, and that's the highest level since March. We're going to show in our short-term view at the end of the show our VIX charts, which are quite interesting, and our market condition indicator, which is a shorter-term indicator that has clearly broken down on most of the major indexes to some awfully negative readings. The put-call ratio also jumped pretty significantly, and that's typical, as the bulls have been unbelievably numbed in this 9 years of upside movement, and they ended up with a bad need for protection as this panic set in. So essentially, step in and buy puts at any price, and that's what pushes the volatility index up. Volatility index is simply a measure of the demand for puts. How much protection does an investor or a fund manager want? And that's what pushes the VIX up. Most of the week, money flowed nowhere. In other words, there was just an evaporation going of equity prices, and all the groups really, except for the golds, got sold very hard. There didn't seem to be any kind of a safety bid going on, and that changed on Thursday. Really, Wednesday afternoon, the bonds started to move up as money started to flow there, and on Thursday, the bonds and the gold market moved up, gold moving up $33 as the dollar was a little bit weaker. There was really minimal background news. China trade was still there, and there's still a huge imbalance in the U.S.-China trade. The Italy news was there also, and the potential for them to want to leave the euro, and that was really very far in the background. The stock movement was really the news, as that two-day decline prompted TV shows to come out and run specials. While Hurricane Michael was in the news and devastated Florida Panhandle in the southeast states, just a horrible situation there. Hurricane stock market really made a lot of news also, as the winds blew strongly to the downside. Horrible $20+ billion in devastation from Hurricane Michael, and not making that small in any way, the more than $1 trillion lost in markets around the world as the stock prices simply evaporated. There were huge declines. Some of the really favorite stocks have had drops at the lowest levels this week of some 30+%. So this has been not a small move, and it came very abruptly. Like I said, investors have been very numbed by this false market situation set up by 9 years of the great experiment, the Fed essentially engineering asset prices up so that the economy can do better, that hopefully it would filter down to Main Street, which it really hasn't done that much. though the unemployment numbers, of course, are at record lows, but the earning power, the spending power for the average worker is just plunged over these years. So it's all basically filtered over to the top echelon of U.S. earners, and that's a sad situation because nobody puts as much blame on the Fed as they should on income inequality, as they've pushed money into these asset prices, and now we see that the asset prices have the potential to melt on the downside. We expected that late September would be a very tough time, beginning then into November, potentially December, for the stock market. SPX, or the S&P 500, we thought would fall some 100, 150 points, and then we talked about 10 to 15% on the downside. As we are only here in early October, we think we're much closer to the beginning of this correction than to the end of this correction. And we would expect that there is much more to come, even though there will be some attempted rallies. You saw this week some big declines coming and came in. Some rally attempts that just couldn't hold, and we think there is much more coming. We're going to talk more about this in the short-term view for the coming week. Let's take a look at our 60-minute chart of the S&P 500, and you will get a sense for what has happened this week. Really, the scale on this is really widened out because of these big declines, but you'll get a sense here. On Monday, essentially what we had was 3.7% decline in China as they cut bank reserve requirements, and that really gave a sense for the weakness or slowdown in there. And European stocks were down about 1% overnight on Italy banks getting hit, Italian banks, over that budget standoff. The market sold off pretty hard, as you can see right there, on Monday, and then had a strong rebound. The Dow was down a lot and then ended up on the day, and there were some cheering, and the market had survived after the previous weakness that we saw in the stock market. Tuesday, Italy yields rose again, and that sold stuff overnight, and we had kind of a choppy day that ended not much change here on Tuesday. Wednesday is when it really came, as the avalanche of selling hit the market. Yields climbed again, and that really started to disturb stockholders. The news on the Chinese trade war, Chinese-U.S. trade war, picked up, and as the rhetoric flying back and forth, and the president talking about putting tariffs on every single product that they had, and then the tech started to melt. They really pushed the market down. Bonds dropped on a weak auction. The Dow collapsed down at one point over 800 points. Actually, that was the close. And it was just a tremendous amount of weakness. Selling continued overnight. The CPI was mild, and gold started to spurt. It was up $20 early, ended up $33 that day, $30 or so, and then waves of selling programs came in. They just sold them and sold them all day long, and then had just a bare little pop-up in the last hour that couldn't hold either. Friday, world markets rebounded from the two-day crack, the worst in 8 months. Earnings seasons did start, and some of the bank earnings were pretty good. And Chicago Fed Evans came out, and he talked about that they were comfortable raising rates more, and the market didn't like hearing that, and it was just ready to be sold anyway. There's just constant selling coming in right now, and you can see when you look at that the really tough condition that the market is in, and we're going to talk about condition as we move into the short-term view. This was a tremendously bad week for the stock market, coming right on time as we were looking for. In the stock market, the broad index is falling between 4 and 5% here as we come into the final couple hours of the week. The Dow, if that's what you follow, fell an immense 1,300 points, and that is just a huge downside move, nearly 5% on the week. It was a tremendously ugly week. The safety bid, like I said, did come into the bond market late, and it was up. 30 years were only up about 1.5 points. That's not a huge move. And the TNX, or the 10-year yields, were down about 7 basis points, and that's after gaining 18 basis points the previous week. So that was just kind of a little knee-jerk reaction to what's going on in the stock market and the bond market. We'll talk about that again also as we get to the end of the show. Might not quite be done in its corrective process. Dollar down about 1/3%, not a very big move in there, but gold did respond. All Thursday was the whole move for the week, up about $30 for the week. And the oil market, which we expected to decline in this period, we'll show you more about that on that chart a little bit later, down 330 for the week. It was a pretty big downside move, as it's apparent that Saudis are listening to our president, or they just simply want to make sure that the oil market doesn't go crazy, and they and Russia have decided to add more oil to the supply, and that's helped it move down. But believe me, the oil traders are also looking at liquidations that are going on in energy stocks and in stocks around the world. And that causes this deflationary move in most of the commodity markets, except for the precious metal market. So that puts pressure on everything when you start to get these liquidations, and that's the Fed. They expand, and then the markets pull back, and the more they expand, and it goes further, they create these massive swings. Don't start me on this, because man, I can go on forever on how much I am annoyed by how much the Fed manipulates the markets rather than us having a free market situation. That is the opening for the Market Week show, and I'm going to bring you some great stuff moving forward, the best and worst for the week, and of course our short-term view for the coming week. All right, this is the best of the week, and what we always do for the best of the week is look at weekly charts. We're a site that works on education, looking at the technical and psychological aspects of trading, and we've got these massive amount of videos, educational videos and trading videos in our site, and the core of our analysis is cycle analysis, and we do that and teach that through our cycle workshop. So you really want to go and take a look at what our cycle 20 module cycle analysis workshop looks like. Don't forget, follow me on Twitter at askSlim, and also become a subscriber on our YouTube channel. Give me a thumbs up if you like this video. So we're going to switch over now, and we're going to look at the best of the week. Now, I don't have a lot to show you here in the best of the week. The only group that really did well for the week in this flight to safety was the gold stocks, gold and silver. And I did a special video on Thursday of this week, a big picture analysis of gold, and looked at GDX, the correlation between gold and the dollar, and 13 gold and silver stocks. You're going to want to see that video, so please do go, if you haven't yet, become a level 2 member, or if you are a member, just go and take a look at that in our big picture analysis category of videos. So the GDX I'm going to show you right now, and this is an example of our cycle analysis. Now, what you see here on the bottom, this big gold arc right there, that's the major cycle in gold. The intermediate cycle in gold is right there, and they're both bottoming here in the end of October. Now, the GDX pattern right over here is that blue dash line. Bottomed earlier, and that often happens, and you can see this upside move in GDX as that bottom came. Well, it was quite timely. You can see each of these troughs line up with important bottoms in the GDX, And now we've had that. And you've got this nice looking bottom right in here that you can see that really looks like it's a double star, morning star. It's a pretty pattern right there. And that's an important low. Were there a pullback, we would be buying it. This is up about 6% on the week. And you had in the gold stocks, Anglo AU up 15%, ABX up 9%, AG, which is a silver stock, up about 8%, and Gold Corp GG up about 7%. So there was some big gains here, and you always get bigger gains in the stocks than you do in the GDX or in the precious metals. So that's that's as far as I'm going to show you on this, and please do go watch the video, and you will see the importance of really understanding our type of analysis and how these groups do move in synchronicity, as we call it. You just watched the opening to the askSlim Market Week show. To watch the complete show, just become an askSlim Level 1 member. It's still no cost to you. It includes my analysis on the best and worst stocks for the week and my projections for the short-term view of the coming week. There's always a chance to learn a lot about special situations, cycle analysis, all kinds of technical analysis, and of course, potential trading opportunities. We have an unbelievable offer here in that you not only get the full askSlim Market Week show, but you get the Market Week archives, which were not available to you unless you were a member before. Plus, you will get special Level 1 videos that we put in there from our premium library, and sneak peeks to new product launches, and of course, more specials along the way. Become an askSlim.com Level 1 member, no cost to you.